All right, everybody. Tesla earnings was yesterday. Stock is up about 7% for the last time I saw it. It was very interesting watching the stock price action while the call was going on. I thought the numbers were bad, as I think everybody expected. They're going to have low deliveries versus the previous quarters. We saw that in the numbers. I think the overarching story was more the call and the guidance that the company was going to give around self-driving and Robotaxi and all that good stuff. But I think the even bigger portion of what happened yesterday was news breaking around tariffs with Trump and everything, which really dictated a lot of the price for most of the call. However, I think some of the takeaways that we got from the call that are important to point out are that Elon reaffirmed to the investing base that he's going to be sort of limiting his time with Doge starting in May, which is when his 130 days of working as a special employee are kind of up for the year. A lot of people are trying to paint this as if this is something that he just decided on or something that has happened between, the Trump admin and Elon that's causing them to separate and go their separate ways. I don't think this is true. There's 130 days that Elon was allowed to work as a special employee for the year. And that is obviously up and coming up here in May. Once Wall Street saw that, you saw it in the stock price, it went up. This was right after Elon was talking about, hey, I'm not going to stop working at Doge. There's all these political attacks. It's wrong. The right thing to do is, reduce waste and fraud in government. And they're coming after me. So the right thing to do is keep working. But however, I will be stepping back starting in May. So investors like that. The other thing I want to point out is if you look at the numbers, definitely a poor quarter from an earnings perspective, a poor quarter from a revenue perspective, a margin perspective outside of energy. Energy came in actually at around 29%, which is 5 points higher than the previous quarter. And it looks like Tesla's making a lot of great inroads with energy. But the company still generated cash. They added to the balance sheet. They added cash to their reserves, even on a down month, which is pretty significant. It kind of talks about the overall health, the financial health of the company. They're able to weather storms. Extremely noisy, extremely, let's say, volatile quarter from all angles, the political angle, the Doge angle, the Model Y switchover angle, the potential demand problem angle. So many different things going on. Cybertruck maybe not selling as well as people hoped. Ramping up Model Y, ramping up energy, all these different things. This company still added cash to the bottom line, which I think speaks very highly of their ability to put together a plan and actually execute against it. But I really think Wall Street's now at the point where they're not really caring too much about the vehicle business, honestly. I think we saw that in the price action today. Yes, the macro discussion, the tariff discussion, is definitely 80 to 90% of the movements that we're probably going to see in the market, honestly, in these next 3 months until the whole China tariff situation is figured out. But it does seem like the broader investor base is really banking on self-driving, Robotaxi, the bot, but primarily Robotaxi in June in Austin, which they've reaffirmed is going live in June right here in the Austin area. Now, we did get some details here around what that rollout's actually going to look like. There were people out there thinking it was going to be the Cybercab, which is this brand new car that Tesla's going to be coming out with. This cyber-looking thing, a two-door, two-seater solution. That's not going to be what they're going to launch with, it looks like, in Austin in June. It's going to be exclusively a Model Y fleet. I'm guessing they're brand new Model Ys they're making. They said they're going to launch with about 10 or 20 of them. And they're going to be launching, more than likely, I didn't really hear anything otherwise that would point to something other than this, but with safety drivers, with drivers behind the steering wheel to make sure that nothing bad happens while they're offering these rides with these 10 to 20 vehicles. Very similar to how Waymo has launched and other autonomous companies have launched in other regions. Now, they did put up a video earlier today where they talked about how they've done 1,500 rides already in the Austin and California regions with a limited number of employees. Looks like they've already tested the self-driving fleet with a safety driver behind the steering wheel pedal. So that's very good news for investors that are waiting for some progress for the self-driving and the Robotaxi network, right? These are huge steps that the company has been dying to make for years. It has finally come to fruition, and it looks like they're on track to launch in June. And then we also saw some stuff about the bot. They showed their new generation bot I don't foresee this really being a huge thing to talk about until probably 2026 or 2027 or later. I think Tesla will definitely talk about how they're using these internally this year. We're doing some test stuff, ramping it up more next year. But I don't think bot is going to be a big deal until probably 2027 or later. That's when the company should be able to start selling these to business customers first. And then probably by the beginning of next decade, they start getting these bots, they'll start getting them into people's homes. I think the thing about the human or robot that's interesting to think about is the safety implications of a human or robot are very different than a car, right? So Tesla trying to get self-driving approved in different regions. This is requiring them to work with regulators, actual regulators, to make sure that these cars aren't crashing, right? They're not crashing anywhere. They're freaking killing people and, going head first and crashing into other people's cars. So there's a very different regulatory regime. Whereas with the bot, if you start selling to customers, business customers rather, businesses can set up very clear delineation between areas where people can go and areas where only robots can go, right? So the safety implications of launching a robot are going to be vastly different, which I think is going to point to them being able to sell more robots to customers, to business customers, way faster than people potentially think. So something to look out for. But again, I don't think this is really a thing that's going to start happening until 2027 or later. Until then, Tesla's just going to use this internally to make sure that it's something that actually works. That's something that they can sell to the public eventually. Now, the one thing that's still kind of hard to understand what is Tesla's strategy really is this cheaper vehicle, this more affordable vehicle, this more affordable model or models that are going to be released in the next month or two, realistically, based on the guidance they gave us that they reaffirmed on the call yesterday. It does look increasingly more likely that it's going to be a cheaper Model 3 or Model Y. The head of engineering, Lars, was kind of talking about how these new vehicles, these cheaper models are going to be similar to the 3 and Y. And this is to try and maximize the capacity that they've built in their factories of existing Model 3 and Y lines. Essentially, the company's trying to really maximize the work and the money they've put into their existing factories and come out with cheaper products. And they're being very coy and very unclear about what these will actually look like. What are we actually looking at here, right? I think that's on purpose, because if they really do talk about, hey, look, there's a cheaper Model 3 and Y coming out, people are going to stop buying the existing 3 and Ys. Now, it could also be that they've figured out how to use the existing lines to come out with different form factors, maybe a significantly smaller 3, or maybe some sort of 3 and Y hybrid where they're going to have a hatchback that's potentially smaller. I still feel like that's going to be a difficult thing to start selling in a couple months, because it has to go through safety testing. If they change too much of the body, they're going to go through a lot of different validation testing to make sure that this is actually sellable. And so my gut tells me that they're probably going to go down the path of what they did with the Cybertruck, which is they came out with a significantly cheaper trim, about $10,000 less. They stripped out a bunch of stuff. They did, cloth seats, and they did all kinds of stuff. So kind of a traditional auto model approach to try and get the prices down, to try and maximize their lines. And the goal here really for the company, I think, is to just maximize the number of cars they can put on the road where they'll be able to sell self-driving, unsupervised, and also have cars that they can add to the fleet. It makes a lot of sense to try and squeeze as much as you can from the existing line to get as many cars as you can on the road. And that is going to be purely driven by price. Can people afford these cars? Can people actually go out and buy these cars and add them to the fleet? From a demand perspective, I thought the guidance that they gave on the call around there being record test drives in Q1 of 2025, literally the last 3 months, they had record test drives, flies in the face of a lot of the noise that's been around. Hey, Tesla sales are dying because of Elon getting into Doge, and people are not buying it because of political reasons and all these things. I think a lot of that is overblown. Is that true in some markets? Absolutely. Is that true with maybe SX and potentially the Cybertruck? For sure. But there could also be a thing where, that might be 1% of sales, and then the negative attention that they're getting, the negative attention is massively increasing awareness for everybody else. And that's what these test drives are. It's a bunch of people that never would have bought a Tesla. They're like, oh, let me check this thing out. They keep talking about it. They keep talking about this thing. Apparently it drives itself. I'm curious to see what that means, right? And so that's going to be something interesting to keep a sort of eye on and something to track as an investor. Now, I do think one of the questions that was brought up on the analyst portion of the call, Pierre, friend of the show, we've had him on a couple times, Pierre Ferragu, he asked, listen, the 3 and the Y are fantastic vehicles. Why aren't more people buying them? It's so much better than your Corollas and your Camrys and your Malibus and your RAV4s, especially the gas variants, right? 15 million people per year, 14 million people per year buy cars in the United States. How come you're not selling way more than you are right now? And I think that's a very fair question. And the answer that Elon gave was, well, eventually people won't buy any cars, which is such a weird answer to give. Such a weird answer to give. And I think speaks more to just how focused Elon is on the autonomy portion of the business. He's just laser focused, 1000% focused on autonomy. He's gotten kind of like just, it doesn't matter what the car looks like, just get it out there kind of thing. Just get the units out there, make sure they can drive themselves, and then let's figure out a process on how to maximize the number of cars we can sell so that they form this perfect form factor of the, the 2-seater with the cyber cab, and then we'll just flood the market with those. But we have to make sure that we sell as many as we can now using the existing lines so we don't have any downtime at the lines, right? They have about 3 million car production run rate built out in their factories right now globally, and they're shipping about 2, if that. And so if you're a long-term investor, that's probably something that you like to hear, obviously. By far the biggest legs pertaining to the company's growth are going to be driven purely by the autonomy piece and way less about entering new markets or, coming out with a cheaper vehicle. Yes, that's going to help move units, but in the end, what those units do from a autonomy perspective, the number of units and how many miles are out there being done by these cars autonomously is 100 times, 1,000 times more important than how many cars you sell today. Is how many miles can the existing fleet do autonomously? That's way, way, way more important. And what's interesting about that is that Elon gave guidance on the call that the company will likely not see any material impact to the financials, to the bottom line from autonomy, AI, and all these things until the middle of next year. So if you're an investor waiting for this to hit this year or early next year, that's not going to happen for the sounds of it, especially with Elon's track record of being late with a lot of these things, right? But if you've driven these cars, if you are in one of these vehicles, we'll go ahead and put self-driving on my Cybertruck right now to take us to our destination. You know that if you're in a Tesla vehicle, the self-driving portion of it, the FSD with hardware 4 version 13.2.8, the latest ones that are out there, it's very obvious to see that self-driving is solved. It's basically solved. And it's just a matter of getting enough data in front of regulators to prove to them that it's safe enough to operate. And that's where you're going to have, the next 6 to 12 months of the safety drivers in Austin, probably in other regions, collecting that data to make sure regulators are happy enough for these vehicles to drive themselves. So if you're a long-term investor, you like what you're hearing, you're tracking the development of self-driving, you're tracking the development of the Robotaxi network, you're tracking the development and the improvements with the bot, and when that's going to start actually doing useful stuff in the factory. These are all the things that are going to set the company apart from everyone else in the coming 2 to 3 years. The unfortunate part is that it's just a waiting game. And it has been a waiting game for the last 2-3 years for Tesla to actually bring this forth. The reassuring thing is that this is not a new thing. If you look at the beginning of the company, 2008, 2009, 2010, when it went public, it took about 3 years for the company to prove to investors that they'll be able to make a profit. And they turned the first profit in, I think, May of 2013 rather. And then the stock repriced itself as a profitable electric vehicle maker. I think it peaked at like a $50 billion market cap. Then the story kind of stayed flat for 6 years, 5 years, however long it took, until Tesla proved to investors that there would be a mass production electric vehicle maker at a profit. So that was the Model 3 ramp, and that was the Model Y ramp, right? And those two things were, stop there, that was smart. And those two things were the things that took the stock price from 50 billion to the 750 billion number that we're at now. And so Tesla goes in waves. Tesla goes in legs. They have to prove to the investor base that they can actually do what they say they're going to do. But once they prove it, the stock gets priced in. That's what it seems like. And I don't want this to be investment or financial advice. I'm just kind of talking about what I see from my perspective when I'm thinking about the story and the Tesla story. Tesla has to prove to the investor base that they can indeed generate a profit with autonomy. And we have gotten guidance from the company that says middle of 2026, next year, that's when profits will actually come in. So it stands to reason that between now and then, it's very unlikely for Wall Street, the stock price or whatever, to do anything until that becomes the case, right? Unless there's some very clear and obvious steps that the company is taking to actually generate income from autonomy. And of course, the macro environment, the tariff situation with China, the decisions that Tesla's going to have to make from a onshoring, things that they have to move stuff out of China potentially, put them in different places, and what that's going to do from a production perspective, or the Fed stepping in and lowering rates because maybe we're going into a recession and Trump has, slowed down the economy too much. These are the other variables that can vastly impact how the stock market's going to price Tesla as a stock, and every other company, really. I mean, if you look at the stock market, everything's dictated by what the Trump tariff negotiation is going through right now, specifically with China. And so again, not investment advice, but if you're somebody who's confident about the autonomy portion of it, the human or robot portion of it, the FSD, the unsupervised, I don't know of any other company out there that is even remotely close to the type of scale that Tesla has to put self-driving vehicles on the road. Tesla literally has millions of vehicles that can drive themselves. Nobody else has that. And it can drive themselves with cameras and a AI computer. Everybody else has to use heuristics. Everybody else has to get into, a computer and manually code stuff, right? Tesla can just drag and drop. They can pick up and drop car, and the same car that was fit to drive in Austin can drive in Orlando, can drive in LA, can drive in New York, and eventually can drive you in middle of nowhere, freaking Arkansas or Nebraska, right? That's the key differentiator. Nobody else has that. It doesn't exist. I can very confidently, factually say that does not exist with anybody else. And the human or robot piece is even farther along, right? There's all these startups doing human or robots, all these startups working on coming out with a human or robot that will help with tasks and so on. But who has the best brain? Who has the capacity of taking the visual, taking the real world, and turning it into action based on an AI process, a neural net process that's generalized, right? Technically, Tesla doesn't have that either right now, but they have the underpinnings of it because the thing that's powering the car will power the human or robot. Nobody else has that. And who else has the manufacturing capacity and manufacturing expertise to potentially make these at millions of units per year? Elon said on the call, by 2030, he thinks he'll have 1 million units per year run rate for the bot. Okay. Last call, he said, they'll have 500,000 by, 2027 and 5 million by 2028. Okay. Right. But relative to everybody else, it really does seem like Tesla is one of one. And so now it just comes down to execution. Like, can you actually execute? And this has been the overarching story for the company and what we've talked about on this channel for a really long time. It comes down to execution. The TAM is there. Self-driving cars that can drive anywhere by themselves at a fraction of the cost of a Waymo, which is going to make it cheaper to ride-hail a self-driving Tesla than owning a car in almost every case. That TAM is gigantic. It is humongous. And then the labor one is even bigger, because why wouldn't you want a human or robot that can do anything, right? That opens up a whole different can of worms, and we've talked about that a million times on this channel. So those are my high-level thoughts. Hopefully it was helpful, and hopefully it wasn't too much of a rant. I kind of felt like it was, but that's okay. All right, everybody.